Namaste. Ni hao. Jumba. You don't forget the Swahili, right? Hey, good morning, everybody. Hey, we got an interesting day here in the Forex world. Lots to talk about, lots to do, lots to trade, how to put it all together. What does it all mean, Basil? Well, that's why I'm here. That's why we're going to meet as a team. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com and ECN, electronic exchange for trading currencies. Awesome. But we also offer energies, metals, indices, binary options, everything you need for success, tools for the trade. Meet here every day, 7:30 in the morning. Awesome. Gives us a couple of hours to align our satellites before the New York Open. So let's just get this party started. Don't touch the stove, it might be hot. If you trade anything, you might lose money. So that is risky and not appropriate for everyone. Hey, if you lost money today or yesterday, you might lose money today, but not necessarily. But just be aware of that. I say, since we're focused on the long term, right? Stay small and stay humble. Never risk money you cannot afford to lose. All right, let's move over to the charts. Boom! Snap! So yesterday I had a power supply blowout, and so I took my machine to the shop, swapped out the 600, which is actually fairly low power supply, 600 watt power supply, but that's been in there. It's been running my 3 video cards for several years. So the hardware looked good. The guy was still impressed. He's like, oh, well, this is good stuff. Yeah. So swapped out the power supply, put in a 650 this time. Still not that big of a power supply, but you know, it's an old machine. Doesn't need any more than that. Cleaned her up, gave her detail. Looks brand new inside and outside. Awesome. So now it's running good. So I apologize for yesterday's technical problems. And as I was mentioning, I do have hot swappable PCs for my trading computers. And the one that I use here for coaching and analysis and, you know, and all the other things that I do, it's a little different, right? I have a lot of files on here. There's a lot of things that are particular to, let's say, not trading. And so that's a little more delicate, a little more sensitive. So, you know, I'll go through and back things up again. You know, these things are always warn you about that. But the interesting thing is my trading computer, so I have 2 other PCs that I use, each running 6 screens, and each only have one thing installed. MT4. And I think there's a browser. That's right, because you have to download MT4. So there's a browser. So it's got Internet Explorer, it's got MT4, and that's it. They're clean installs. There's nothing else on there. So that's all they do. And they're also set up so MT4 is dragged across all 6 screens. So I can't really coach on them. Like, so yesterday my main PC goes down. Can't really use those other ones to do these webinars because, you know, you would just see one of 6 screens and the templates are different and I can't switch between them because, you know, whatever. And broadcasting 6 screens would have been ridiculous as well. But, just because this happens a lot, and in fact it happened to someone else, right, Adam, that I know? Or his PC goes down just because it's dusty. This kind of stuff happens. Now, you're a multi-billion-dollar currency trader, what do you do when your $1,000 PC blows up? How long do you want the show to stop? So, as I've mentioned before, I keep these computers extremely lean. There's nothing running on them except MT4. There's nothing installed. I don't download anything. There's nothing. So there's no reason for them to break. They just sort of burn out. So that's good. But also behind me in my closet here in my office, I have a cardboard box. Inside that there's a plastic bag, and inside of that there's a PC. It's been sitting there for years. It's got Windows XP. Windows XP. But I haven't used it. So it's been turned on once to activate Windows, and then download MT4, install my templates, my login information. Then it was shut down, put back in the box, wrapped up in plastic, put back in the box, and it's been sitting there for years, 6, 7 years. And if one of my trading PCs goes down, like my main PC did yesterday, I simply throw the computer in the garbage, grab the other one out of my closet, plug the monitors in, because it actually runs 8 screens. The one sitting in my closet runs 8 screens. So I plug in the screens, plug in the keyboard, the mouse, plug in the RJ45, turn it on, and I'm in business. Total turnaround time, probably 4 minutes. Because you gotta unplug things, and then you gotta go to the closet, so it takes a little time. And why fix the other one? Just throw it away, just move on. Boom. So just sort of a heads up, when you got money on the line, money doesn't sleep, does it? So just, I don't know, some people find that kind of thing interesting. I also have 2 redundant high-speed internet connections. If my 60 megabits per second fails, I have a wireless 20 megabit. So I hardwired for 60, and then I got a second internet provider, second cable coming into the house, and that goes to a Wi-Fi, so that if my adapter fails, or if the internet goes down on the first cable, that switches over to wireless, and I got 20 megabits per second on the wireless. Because the internet can't go down. Do you understand? I just can't go down. Yeah, Stephen, but like I said, Stephen, that would be important, but not, for maybe this PC, but not the other ones, right? And you don't really need, you don't need the swap the hard disk stuff when most things should be on the cloud anyways, right? The VPS, yeah, I actually do have VPS accounts, but the issue with the VPS is, running multiple monitors and stuff isn't always the easiest thing in the world. So anyways, just that's that. So yesterday, since I didn't do the webinar because my PC went down, I didn't do the Commitment of Traders report. I can cover that today. I think you guys want to talk about China though too, right? Yep. All right, so there's this valuation. Now, honestly, we did talk about, let's say not that it's specific event happening, but we did talk about China having manipulated interest rates quite a bit recently, and then China manipulating the RRR, the reserve requirement ratio, several times recently, that they're kind of running out of conventional tools. But they face a very serious problem. And it's not necessarily only the alien economy, but there's sort of a perfect storm going on. The economy is slowing down, but what about their currency? We're currency traders here. What currency risk are they facing? Right? They're manipulating. Today they devalued the CNY. In China it's the RMB, renminbi, or yuan, right? Whatever. So many different names. But why is the yuan high? Because the dollar's strong. What? Yeah, they're pegged. Remember that? So we have discussed this. We did discuss that they're going to need to do something. And the problem that they're facing are two fronts. One, Europe is still just starting to recover. That's why industrial production is low in China. But B, they've pegged themselves to a currency that's ripper strong and this is more important, likely to continue to be ripper strong for a very long time. This is a serious problem. And so the idea is, what do they do now? And boom, here's what they decided. Now, if you know me, I've told you the week after non-farm payrolls in August is the slowest week of the entire year. Huh, kind of interesting they did it today. But they've devalued their currency, a whopping 2%. That doesn't matter none, right? But it's interesting because it's the beginning of something new. That they're starting to, well, you can't call it a free float, but they're starting to, let's say, allow the yuan to not be pegged. I mean, the first move was to even have a band, right? To float 2% up and down. But now to actually devalue, they're trying to say, what they're saying is the US dollar is strong and it's going to continue to be strong. Do you understand that? That's what they just told the world. And that if the CNY is pegged to the USD, this is going to be a problem for exporters, right? The balance of payment and the balance of trade and all this kind of stuff that affects global macroeconomics. If the value of the dollar goes up and continues to go up, the value of the yuan is going to go up, and this will make Chinese products more expensive to foreigners. And that's not good when you're an exporting nation, especially one that's already facing troubles, right? So anyways, China devalues the currency. Boom! Snap! Intervention, right? And what impact does this have? Well, one, it confirms the US dollar is going to be strong for a very long time. And two, who does China compete with? They don't compete with the United States, no way. To be used to no competition, no way, definite competition. Japan, India, Korea, Indonesia, Malaysia, so on and so forth. No, not Singapore, not Euro, no, I wouldn't say Russia. No, not Russia, not really. So they're going to compete with other exporting nations, ones, right? Especially ones that have surpluses, right? Surplusing trade nations. So all of those currencies, and so let's just say all other Asian currencies, even Kiwi and Aussie, they will devalue too. Yeah, Thomas says cost of labor is a concern. Yeah, actually, that's well documented. Everybody knows it. You know, there should be strategies in place for it. I mean, there's nothing new there. We knew it was coming for the last, you know, decade or two decades. But here's the interesting thing. Somebody predicted 2 decades ago, whatever it was, I mean, forever ago, they predicted 2015 was going to be the year that the one-child policy hits as far as generational gaps are concerned. So that's the interesting part of that. And we look at China and, you know, they're sucking wind on the year that it was predicted that that process would begin. So it's interesting, but, you know, it's interesting, but it's not going to really affect things this year or next year. Okay. But anyways, so just put that in mind where, you know, Asian currencies, they're going to want to weaken as the US dollar increases interest rates. See, this is the play, right? So China's playing it out in case there's a September rate hike. How about that? I mean, we can talk about it all different ways. Who else is getting ready to panic? South Africa, Mexico. But this is all hot money flow stuff, isn't it? And in many cases, those are last year's trades. You know, I've been talking to you guys, you know, into Mexican peso hot money for years now, and that may continue, that may not continue. But just think about it: when the United States of America recovers, you know, their economy goes from contracting economy to an expanding economy, does that hurt Mexico or help Mexico? What? Helps, dude. It helps. Yeah. The largest economy in the world happens to be next door to Mexico. And so when it starts to improve, that's good for Mexico, guys. So that was our front run trade, I don't know, 2 years ago. What's the interest rates in Mexico? Well, relative to everybody else, super ripper high. So if you were hanging with me 2 years ago, for example, I was actually downloading presentations that Carstens was doing. If you don't know Carstens is the president of the Bank of Mexico, their central bank. So yeah, I would actually hang out at the Central Bank of Mexico on their website, downloading PowerPoint presentations and trying to guess, since I don't speak a word or read a word of Spanish, trying to guess what was said, because it was important. Remember, I'm your mentor, but and you could also say, well, if Wayne's doing this, my competition's doing this. And if you're not downloading PowerPoint presentations from the Bank of Mexico, or you don't know who Carstens is, well, maybe you don't have the edge. You might be trading against somebody that does, right? So get into it. Fall in love with Forex. Get into it. Download things in foreign languages, and just so that you have the chance to read them. But anyways, so that's an old trade, and we'll see what happens there. But as the dollar gains strength and as interest rates rise in the United States, that will impact other countries. So watch India, watch South Africa, watch Mexico, see what happens. Yes, Vic, right, 3%. And that was really good when interest rates are zero everywhere else. Do you understand? Yep. Where did you, what, the PowerPoint? Just go to the Bank of Mexico. Banco de Mexico. Yeah, pretty interesting, pretty typical stuff. Yeah, well, sometimes they're in, you'll get the video too, right? But that doesn't help me. Yeah, you get the video and the audio, but I'm just saying, fall in love with it. What's the consequence of everything? If the interest rates rise in the United States, what happens? Who wins? Who loses? Well, if you're pegged to the dollar, your currency is also going to go up. Who's pegged to the dollar? You see what I mean? Follow the money, guys. Right, you don't need me to ask those basic questions, right? Is the Fed raising interest rates? Yes or no? Yes. When? September or December. Will that increase the value of the US dollar? Yes, probably. Who will that help? Who will that hurt? Who's pegged to the dollar? Will they enjoy the increase in value of this dollar or not enjoy the increase? What would they do? Where would the money go? It's fascinating stuff, right? Get involved, fall in love. So that's that. You guys want to do some commitment to traders report? Yay! Thank you, Forex.today. You want to do some EU? All right, let's do some EU first. You want to do some trading? All right. So with that being said, what currency pair should you be trading today since China just revalued their currency? You should be selling Asian currencies. Okay? And what about who would not be affected by this? Euro, pound, for example. Yen would definitely be affected. Probably more than anybody. Right? So you look at like a pound yen. Oh, I'm already on pound yen. That's weird. Okay? And you get moves like this. Would it have been helpful to already be a bull on the pound yen? Okay. How many times have I asked you to print out long-term charts and make a technical or fundamental bias on the charts? Print them out, write out your bias on the paper you print out with the chart image, and it's a felt tip marker that stinks up the whole room, and you write buy, pound, yen, or, I mean, almost every day. I know you haven't done it. So you're not, you're not hurting, you're not making, I only feel sad that that you're not doing it because you might not be successful, right? Oh, some people have done it. I bet you're probably close to success, but I think those habits are positive habits. Even if you're losing money, I'd rather be losing money doing stuff like that than losing money and having no idea what you're doing. But it's just like one of these things where it's not surprising that the market turns in your favor. It'll happen more often than not. You're making decisions on long term. You're taking out the noise. Do you guys remember me saying last week that I hope the yen gets strong? Now, why would I want the pound yen to come down? Why would I say that on Friday? I want the pound yen to come down so I can buy it. Well, that's the difference between a pro and an amateur, isn't it? What does an amateur do when it's falling? Yeah, wait for it to fall 100 pips and then start selling it. How would you like to start the week at the support, right? M2 predicts M4, right? So this is what pivot points predict. That range right there. Okay. If you bought it a few hours ago, and Igor bought it, right? Igor, are you here today? I think he bought it at 194.50, which is a good trade. That is a good trade. Target, 95.50. That's a 100 pip trade. Greg got it? Did you get it at 50, the 94.50 level? See, I don't like that. A little above means no plan. Right? Because at least on, if we're talking about the last couple of hours, what it did is it went up, it came down, retested the 5 EMA, retested the pivot, retested the midpoint psych. You should be in at 50. If you're saying that, are you in at 62? That's way too late. Oh, well, 93.25, that's just a different plan. That's fine. Cool. Not clear on the buy signal. All right, let's see. I don't have a drawing tool pumped out yet, so let me turn that on. But you buy dips, right? And you buy dips to support, right? So that's it. You shouldn't need much more than that. We can fold all these other things into it. But all of that is truly unnecessary. What you should be looking for is the up, 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 right? Support, up, 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 support, up, 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 support, up, 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 take profit. Notice that, right, there's all kinds of things going on here. Up, down. See these little wicks? Up, down, right? These wicks are little tiny pullbacks. And if you have a 15-minute cycle, even better, right? So what I'm suggesting earlier today is when it came back to touch the midpoint psych level at support, it was a triple top. Right? Are you a bull? That's a yes or no question. Where to support? You identify it, and when you get there, you buy it, right? Right here. Because as soon as it makes a high, which it did here, you go back and you identify what used to be resistance. It'll now support. You draw a line like that. You should be long, 40 or 50, and now you're just jamming it. This is, yes, this is now a 15-minute chart. Okay? So the habit that I want you to get in, as soon as it makes a high, like you're up here kind of thing, you've already drawn this area to buy. That's what I'm trying to get you to do. You guys have seen me do it thousands of times. I'm just trying to get you to do it once. Not just once, but every time, I suppose, right? But I know you've seen me do it thousands and thousands and thousands of times. So it's to get you in the habit. You say, are you a bull or a bear? You know I'm a bull. I've been a bull for years, in fact. Years. That's a long time. So it makes a higher high, right? This is the buy zone. When? I don't know. Many hours later. And that's the hope. If it fails, you lose some money. What's the big deal? That's why you don't want to be long sort of up here. You don't want to be long at 65. You want to be long at 45. Okay? And if it comes down here to 35, well, you don't want to be long anymore. Now you're probably saying, Wayne, you're still at 35? Well, let me ask you something. If you lost 10 pips, would it ruin you? If you break even 70% of the time, break even 70% of the time? I'm just saying, like, a lot of people jam their stops way too quick because they're scared. I suppose it's a start. Yes, Vipul. The analysis, it's funny, does it start on the daily? The interesting part of the language is, start on the daily. It never stopped. I'm always doing my analysis. And in fact, most of my analysis isn't even on the charts. Okay, but I knew what I was going to do today. Do you remember actually talking about this last week? I think I said on Thursday of last week, I knew then what I'm going to do on Wednesday. Right? You remember that? And I know what I'm going to do in June of next year. I don't think anything's going to change between now and June of next year. Right, football? It's just like, did I start on the daily? I never stopped doing my analysis. But was it the daily? Well, the daily is important because it tells me where in the cycle I am. So let me change this to a daily. Okay? And I'm looking at two things. What's the oscillator doing? And is it meaningful, right? And two, where am I? Where is price relative to the moving averages? Okay, I'm riding a 5. Good. Okay. Doesn't look bearish. Right, so it's like, right? So it's done. Do I have videos for you? I'll have to do some videos for you guys. I use the 21 and 55 EMAs. The orange and blue are the 21 and 55. And together they tell me the direction and the speed of the market. Yeah, read the book. That's helpful. And then I use the 5-8 for the speed and direction of price, or momentum is what I call it. In direction is price going, and how fast is it getting there? The book is Strategic and Tactical Forex Trading. It was the best-selling Forex book for about 4 years. Top 10 book for about 8 years. Yeah. Cool. Right on. Well, Wiley Publishing thanks you. It's not going to do me any good, but I hope it does you good. Yeah. Yeah, about that could be true. We're in that time of year to start building positions. So, that's why I'm not afraid to take losses. I just don't want big losses, right? Can we take a look at gold? See, I don't even need to look at gold. So let me tell you about gold. Once it hits 1100, okay, those that are already holding physical gold are going to use the futures market to support price, because they don't want it to break below 1,000, so they'll start defending it at 1,100. I actually said this a year ago. Okay? So now when we got to 1,100, that's when I said, all right, there's no reason to own gold, right? Gold is not going to fall any further, but it's not going to rise either. Meaning, like, I wouldn't buy gold futures because I think it's going from 1,000 to 1,500. No, it's just going to stop falling, right? I mean, this is literally what I'm talking about. The last time I gave a trade on gold was sell it at 1382. So now we can go to gold, and there's nothing surprising or interesting about gold. It's unbelievably straightforward, predictable. And so here we are, we get down, we test the 1100 area, and ta-da! What a shocker. It starts going up. Is it more valuable than before? Well, not in sort of intrinsic terms, but okay, price has stopped falling, which was the only premise I gave, and we're right at that 1100 area. Is it going up because of geopolitical fear? No. Is it going up? I mean, the only reason it's going up is there are market participants that hold physical gold. If we break this 1100, remember the 1100 is only to defend 1,000. If, and I'm not predicting it will, but it could, but if it drops below 1,000, oy vey, we're in a whole new world. Okay? But who knows? Someone's going to defend that. Either the Saudis or the Russians or somebody. But it doesn't matter. There's no reason to own gold. So 2 reasons to own gold. One, not just inflation, but hyperinflation. Are we in a world of hyperinflation? No. Now, how about 5 years from now? Well, maybe in some third world countries. Yeah, and India would be one of those countries, right? Okay. But anyways, hyperinflation has to be the fear. Well, we don't have that. We don't even really have inflation. Okay, and then 2, right, if it's not hyperinflation, it's catastrophe. It's a safe haven flow, right? The other way. Not the fear of your money losing value because of inflation, but your money losing value because of lack of productivity. Well, we're not faced with that either. Okay? So it's like, so all I said is the fall in gold is over, is all I've said, and I drew my line in the sand, and it's all there, logical, right? There's nothing, it has nothing really to do with the price. It's just some people don't want it to break through 1,000. Okay. How about oil? Oil's another interesting story, and I have it double bottoming out at 44. And we get down in there, and, you know, it's, well, we got a green candle anyways, so we'll see. You could also draw it sort of this way here. Obviously, that's a potential, so that's 40. All of that's fine. So as we get closer to 40, I'm interested in observing whether I should buy it, and not just all commodities. So we're watching the Baltic Dry Index, right, which today is down 3%, and we're watching the CRB index, right? How many people are on board with that from past webinars that have gone through the whole process, and this is the CRB, and this is the Baltic Dry, and the BDI, right, and the CRB, and Canary in the Coal Mine, and yeah, cool. Cool. Well, why are futures down today? Wow. Okay, so today, what does that mean for today? Well, something unusual happened today, and that's typically risky, isn't it? How often does, an important country devalue their currency? How often? Yeah, almost never. So what does that mean? Well, I don't know. And that's it, right? What does that mean? I don't know. Let's get through today and find out. I mean, you don't load the boat, right? But I do think carry trade. Here's what I think. You sell Asian currencies. If China devalues, all other Asian currencies that compete with China will devalue as well. But let me ask you something, like, if I had printed out my Aussie dollar chart a month ago, would it say buy Aussie dollar or would it say sell Aussie dollar? It would say sell. If I printed out my Aussie dollar chart a year ago, did it say buy Aussie dollar or sell Aussie dollar? Sell. If I printed out my Aussie dollar chart 2 years ago, when we were at 90 something, 97, did it say buy Aussie dollar? Did it say sell Aussie dollar? Sell. I've been selling it every single day for like almost 3 years. Now, why would I do that? And why am I so clear about it? Governor Stevens, in charge of the Reserve Bank of Australia, told us when the Aussie dollar was at 97 that it was overvalued and needed to fall. Okay, he said it was worth 85. I'm not joking, guys. The guy in charge of the value of the Aussie dollar came out and said he thought the Aussie dollar was 1,200 pips overvalued. Well, what do you think I did? It was like 60% of all my trades that year had an Aussie dollar on it. It was ridiculous. It went from like 14% to like 62%. Now, why would Wayne do that? Because they gave me those pips. So when we drove it from 97 down to 85, guess what Governor Stevens said? And I mean said it, not implied. Not just too high. He said, it's not worth 85, it's worth 75. So I made another 1,000 pips. He actually said it. Like, why you don't have those pips is beyond me. He told you, right? He told me, he told you, he told everybody else. It's one of those things where it should be absolutely, totally free money, guys. Absolutely, totally free money. It's not even a discussion of why. Who cares why? Because Stevens said so. And then why are we down here at 73? Because we don't know what it's worth now. We're in between because he won't say. He actually told us the value. How often does that happen? How many times has a major central banker come out and said, we say today that our currency is overvalued by 1,200 pips? And right? Like never. So anyways, you know, it was one of the my favorite trades was the pound Aussie, the Aussie pound. Do I even still have that chart? It was just ridiculous. Like it was I must have made 1,000 trades. I don't have it on this platform. Funny, I don't even have it. Must have did 1,000 trades on that. Well, just for fun, let me bring up Euro Aussie and then switch it out to a pound. No, because they're cutting interest rates and they still say historically it's overvalued, blah, blah, blah. All right. Uh-oh, I got some EA somewhere on this thing that blows up my account. Or not the account, but kills the... And that just occurred. All right, hang on. Beep. I can find out what EA that is. Oh, say does that star-spangled... Come on now. All right. Let's see. Okay. How you want to do this? Let's take this one and this one and pound Aussie and Joseph. I think Joseph, are you? Yeah, Joseph, you're around, right? You were hanging with me when we did this pound Aussie every day, right? DeBeesta probably was too. We killed this one. It was ridiculous. There we go. August 2014, guys. Look at the bullish engulfing candle. Right? Look at this, guys. Weekly, it went up 50%, up 618, up 618, up, 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 up. Holy schnicker-schnocker. And that's not even the beginning. So, 2 years ago, we started with this. And I'm telling you, almost every single day, I was on this pound Aussie multiple times. Little pullback, boom. So, it first started with the Aussie. Governor Stevens said the Aussie dollar was overvalued. So, right? So this pair had to go up simply based on Aussie. Okay? And then it was either here, I think it was here. It was the perfect storm. Yeah, right at the end of summer, right where we are today. Like I said, I tell you over and over and over, third week of August is the best trading week of the whole year to set up the rest of the year. So here's what we did the rest of the year. And this had to do now with the Bank of England. No! No! It was the IMF, wasn't it? Come on, who was with me? DeBeast, I'm pretty sure was. Joseph, pretty sure was. YJ, are you guys in there? I'm pretty sure you guys were all there. It was the IMF report, wasn't it? Oh my God, I remember that. This was where they reaffirmed the positive outlook for the UK economy. Forgot about that. So anyways, I knew it had to do something with the, it wasn't Bank of England, it was the IMF. And so for the next 6 months, it happened again. First 6 months, thousands and thousands and thousands of pips because of the Reserve Bank of Australia. And then for the next following 6 months, thousands and thousands and thousands and thousands of pips because the IMF reaffirming the UK, which is right here. Let me change the colors just to, okay. This is when the rumors started that the Bank of England would be one of the first central banks to raise interest rates. This is before the taper tantrum, and I mean, this is a long time ago, guys. But the point is, the information was made available, and it should have been considered free money. It rained. That's right, YJ. It rained in Tokyo that day on a hot summer night. Didn't it rain? Pretty sure. I mean, like, dude, you guys should know this. Like, it should be in your DNA. Like, you remember, I was there when that happened. Stuff, right? Right? I was there when that happened. I was there. I remember it. That's what currency trading can be. Now, do you remember it because it was a lame, boring thing? Or do you remember it because it was discussed for weeks in advance in great detail, and you're sitting there waiting for it, and you load the boat, and it goes up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row, sideways for 3 weeks, and up a couple more, right? And then, look, it's year end. The only reason it stopped, year end. And here's the other thing. I remember this. You see this move in here? I remember that. I got knocked out of like 67 trades that day. Somewhere in here, this gap. Yeah, I just remembered. I haven't thought about it in forever. But I remember that. Honestly, I remember that day. I got wiped out. I remember, I'm pretty sure I told YJ that day, I'm like, oh my God, I just got wiped out of every single trade I'm in because I've been buying since here. It was right between the second and third week of January 2014. I remember it like it was yesterday. I can tell where I was sitting when I opened up my charts and went, holy crap! The yen's moved 300 pips overnight, and I'm out of everything. Woo-hoo-hoo-hoo. Holy smokes! I got nothing now. Okay? So this whole time here now, this is just interesting. This has nothing to do with anything, I guess. But this whole time here, we spent rebuilding the portfolio for the third week of August, which was right there. Oh, snap. I taught people for 6 months to be prepared for that. So it's just cool that we're coming up to that date, you know, where the first move started, right? And then produced opportunities and just lovely stuff, guys. Louflet. Louflet. So, cool, man. Imagine that, having traded every single day for over 10 years and you still remember each candle like it had a personality. Okay? But, so here's the bottom line. Let's do the bottom line here. I beg you and beg you and beg you, like a silly old man, every day to make decisions based on either technical analysis, long-term technical analysis, or your fundamental bias, and trade in that direction. And I hope every so often when I show you these things, you say, holy crap, I might be doing this all wrong. I meaning you. I don't know. Someone has to be right. You know, like that. There's something bigger and greater than that. Than you know what your oscillator's doing right this second. Right? Right on, pal. Yeah, the simulator stuff. I'm happy to do more of that. I mean, it puts me at risk, right? Like, God forbid, what if I did poorly in one of our simulation things, and then that makes me vulnerable to look like a nincompoop. But I think I've made, like, what, 15 trades on the demo and only lost 2. So I've been lucky so far. But, you know, I'm just suggesting, guys, that, you know, you need to know what you're going to do before you do it. Print out your charts. Take a stand. Be a bull. Be a bear. Understand why. Research it. Love it. Love the research part. Do you understand that I could talk to an investor today or tomorrow and say, first of all, I have a trading strategy based on long-term fundamentals, right? Global macroeconomics and technical analysis. That, generally speaking, I'm a trader. Does this make sense to you guys? If I just said that? I base my strategy on global macroeconomics and long-term technical analysis, and I generally trade in the direction of a trend. And for the last, I don't know, last 4 or 5 years, I've been short the Japanese yen. And for the last, I don't know, 2.5 years, I've been long the US dollar. When did does anyone know the actual minute or even second that I switched from a dollar bear to a dollar bull? And I was a dollar bear for years. And then there was 1 second. And I said, that's it. I'm a bull. And we had talked about it for 6 months in advance, maybe 9 months in advance. I told everybody exactly. I didn't know what day and what second it would happen, but I knew what event would create it. And the moment it happened, I switched, as I said I would. And that was the day the Fed announced the taper. It wasn't even the end of quantitative easing. It was the beginning of the end of quantitative easing. Because less bearishness is the start of bullishness, right? How interesting is that? And the next step is we needed the ECB to get off its butt and finally do something. And we knew when that happened, the Euro USD would crash. Oh, but Wayne, it only dropped, 3,000 pips. Yeah, I know. But, it's the beginning. But, that's how I make my decisions, guys. Why would you sell the hell out of the Aussie dollar for 3 years straight? Well, because their central bank told me to. That's the end of my argument. Right? I mean, that's it. That's all I got. That's the end of my debate. So cool beans, right? Cool beans. All right, so here's going back to our conversation before. Could be a good opportunity to sell some Asian currencies, for example. Now, why would I want to do that? Well, first of all, I've been short the Japanese yen for, I don't know, 3, 4, or 5 years. I can't even remember. It's been so long. Should I be freaking out about 125? See, 125 was my target 2 years ago, wasn't it? Was it 2 years ago? I can't even remember. When were we at 100.50? When were we at 101? Was it 2 years ago now? 18 months ago? Guess about 18. So everybody that knows me, that trades with me every single day, knows that was my target when we were 2,400 pips ago. Yeah, last year, right? 2,400 pips. We talked about it day after. We talked about it for weeks and months. Weeks and weeks and months. And all we did last August, 1 year ago, right? Was it 1 year ago? I can't see it. The time part's hard for me. Because I don't have regular sleep patterns, so I don't know if it was a year ago or 2 years ago. But I do remember we spent the entire month of August doing nothing but loading the boat with as many yen pair trades as possible. Yeah, so 1 year ago, right, Kareem? By the way, I never got a thank you yet. Yeah, but wait, it's only 2,400 pips. And Wayne, I was only on 10 currency pairs. It was only 25,000. Right? I think September was 15,000 pips, and October was about the same, and November was about the same. Yeah. So anyways, cool beans, man. So should I worry about 125? Well, we haven't had a policy change for a bit, for a while, and we're waiting for new policy changes, right? So If China devalues their currency, does that give permission to the Bank of Japan to do something to weaken its currency too? Oh, awesome! So what's 2% of 110? Okay. So, all things being equal, where will the USD yen go? Up 2%, right? Cool. Well, let's do it, eh, Marcia? Let's get it done. Another way to treat this, just out of sort of trader psychology stuff, and we did this before in the simulation trading, is I was suggesting you stay long until it stops going up. Right? And you just keep doing it until it stops working. Right? Like this is sort of like a knockout punch, right? All right, so Demeter, because we've been talking about cornering the market on Kiwi yen, well, I would expect on the short term that the Kiwi dollar will be negatively impacted by the devaluation of the yuan. Okay? Because it's also an Asian currency. Okay? So for example, once it makes a lower low, what do? Hammock, fib, sell somewhere between the 382 and 618 Fibonacci retracement, right? Once again, something I've taught you maybe quite literally 1,000 times. If you wanted to, you could have sold it. Is that a buy? Well, here's one thing, and then I think we got to wrap up. I've been taking way too long in our webinars. But one thing that traders are forgetting, I think, a lot is they're paying attention to, let's say, the price action I'm trying to give them, but they ignore the fact, let's say you're a bear on this. I don't even know what we're looking at. CAD whatever. Let's say you're a bear on this, and it's doing this, and they're selling. Is that most ideal? And we haven't even got to the COT. Yeah, let's do it tomorrow. Can you email me? I'm probably not going to be able to respond to emails. I'm sorry, guys. But I'm here every day when I'm here, right? So yeah, the issue is, yeah, it's trending up. So you start by printing out your long-term charts and say, is it bullish or bearish? And then you look at your 15-minute charts and you say, is it bullish or bearish? And if the price action is up, but the market is down, or whatever, let's go back to the 4-hour. Okay, then just make sure you're lining things up properly, right? So anyway, sorry, Vipul. I'm happy to help. I'm here every single day, day after day after day, hours and hours. I promise 45 minutes. I'm averaging almost 2 hours per webinar. And then I do manage a small team of traders, and I like to give them my focus because, well, they're trading my money. So I'm here for you when I can. And when I am here, I'll give you the shirt off my back if I think it'll make you a better trader. But there's only so much. I also need to trade. I'm also setting things up and dealing with clients and doing this and doing that. I'm a busy boy, so I'm doing my best. Yeah, you wanted me to send you trade. It's like it wouldn't be fair. I'd have to charge you thousands of dollars for it because other people pay thousands of dollars for it. So. Yeah, but like I said, when I'm here, you have my full, undivided attention, and I try to do more than just technical analysis. And like even today, we didn't even really get to it, but I do try to give you what can't be found anywhere else. But let's do technicals tomorrow. And if later on you guys want me to do another simulation, I'm happy to do that. All that kind of stuff. No, I appreciate you guys. Honestly, I enjoy working for you, really, and with you every single day. And I think 10 years of it is proof of that. And I don't foresee any reason to not continue. I mean, I'm here for you, and in many ways, you guys are here for me, and I know that, and I appreciate the work that you put into to improving. And sometimes I do exaggerate for effect. Sometimes I do intentionally strike a nerve with you because I need you to pay attention, and I need to talk to your psyche, not just your intellectual brain, but your emotional brain. And sometimes I have to wake it up. So hopefully you don't get too mad at me at times. But sometimes it's required that I put my arm around you and say, hey man, you're doing good, keep it up. But sometimes you need to be slapped in the face and say, what the hell are you doing? I trade all hours. I'm really good that way, but I'm also a bit of a mess that way. My sleeping patterns are very inconsistent. I'm always on. So yeah, if you're struggling with that, it is very difficult. The best thing to do is to create a routine, and the best way to create a routine is around the best hours to trade, and that would be pre-London, pre-New York. Also, if time is a struggle for you, meaning either consistency or you just don't have much time, then you need to move away from small time frame trading to longer time frame trading. So it's pretty interesting when I do like 100, 300 OCOs. It really, it's hard to get that wrong. If you're making your decisions based on technicals and fundamentals, that's a great way to trade. Yeah, with an OCO. But what I'm saying is 150 pip stop, because that's 50% more than the average daily range. So you really have to be wrong to be knocked out of that trade. Oh, one cancels out there. Yeah, there's a video of me on Bloomberg television discussing that. It's somewhere. But that's what I would suggest if you don't have a lot of time, because what you can do is you'd open up charts, maybe only have 15 minutes a day, and you say, all right, am I a bull or a bear? You should already know that part, right? And then you say, all right, I'm going to sell, where's resistance if you're a bear? And you find a 50% Fibonacci retracement is overlapping, particular like a central pivot point or something. So you throw down a limit order, put on 150 stop and a 300 pip limit, and you're done. If it's triggered, you're probably not going to lose. Now, maybe you don't get all 300, maybe you do. But at least at some point, you should be able to log in. If you're down 72 pips, you're like, oh man, come back the next day. And if you're up 72 pips, move your stop, lock in a small profit, or take your profit, or just let it run. And sometimes you'll be in a trade for, I've been in trades where you just sit on it for like 2 weeks, and it just doesn't really, sometimes, and you go with the ebb and flow, right? It's up 72 one day and down 50 the other day. It's just floating around, and eventually the fundamentals kick in and trading comes back, and eventually it kind of goes. Which is fine on a day when nothing happens, because we all know your worst trading day as a short-term trader is probably a day where nothing really happened. Right? Did you guys ever notice that? If you're a short-term trader, your worst trading days, you blow out 250 pips on 7 trades, and then you look at what happened, and you're like, dude, it didn't even do anything today. Well, what if you were in one trade with 150 pip stop loss on it, and it just floats all day? Nothing happened and nothing happened. But you collect an insurance, or you collect an interest payment. So which one's worse? Like, Wayne, I can't imagine 150 pips stop. That would be the end of the world. And then you lose 150 pips on 5 bad short-term trades anyways. Well, how about just one long-term, technically smart, fundamentally smart trade that doesn't do anything today, except collect an interest payment? And then maybe it does nothing tomorrow, and then Thursday or Friday it starts to move up, and you're like, oh, I got it. Move my stop. So what I recommend, and again, I've gone way too long, what I recommend is you have multiple trading accounts. So go to TradersWay.com, open up multiple trading accounts, fund them individually. Right? Let's say $1,500, right? Instead of, $5,000, whatever. Just any math you want. And one account is for short-term trades only. One is for longer trades, like maybe swing trades you're in for 2 or 3 days. And the third account is carry trades only. What I mean by carry trade is you spend the entire month of August, every time you can get into it, a yen short, which means like pound yen long, euro yen long, Aussie yen long, Kiwi yen long, whatever. Anything with a yen, you're long, right? You do it one trade at a time. You move your stop to break even, and then you find another trade. And you never intend to get out of that trade. You understand? Your goal is to get 75 open positions if you can. One trade at a time. Move your stop to break even, find another trade. A lot of them are going to get knocked out. Some of them are going to stick. Keep adding to it. And at the end of 2017, you'll have 72 trades open worth $28 million and collecting interest payments on every single one of them 7 days a week. Oh, and you're up in pips. Oh, and by the way, you still have 100% of your margin available. In fact, you'll have your margin will have grown. I mean, just whatever. Yeah, it smells like a plan, right? But, I've been teaching this for 1,000 years, right? I think it's in the Old Testament, right? How to position trade. It's been going on since the beginning of time. So anyways, I love you, man. I want you to succeed. I care about you. I want you to win. So I hope you're willing to fight for it. So thank you for meeting me here at Forex.today. I guess tomorrow we're going to do the Commitment of Traders report. Sorry, we just had so much going on with China. At least we could talk about it like intellectuals, right? Thank you to TradersWay. Hopefully become a client. Here's our business plan. I'll lay it out. I teach you how to trade successfully. You start to develop real skills that you can see in your demo trading. Meanwhile, you save your money until you feel confident. Once you're confident, you say, I'm ready to start trading real money now that I have proven skills. And I thank Wayne for that. And I've built loyalty with TradersWay.com, so I am going to open my live trading account with them, and TradersWay.com will be my prime broker for the rest of my successful trading career. That's the business plan, that we invest into your success up front, first, for free. And once you find your success and develop your confidence, you'll pay it back. That's it. I think it's a pretty smart business plan. So peace on earth, may the pips be with you, may your profits be above average, and I'll see you tomorrow and the next day and the next day, so on and so forth. Cheers.